I think some people would say I'm probably the world's most unconventional investor. Others might say I'm the world's weirdest investor. Whatever you think an investor is, that's not how I operate, but I don't really read, the Wall Street Journal. I don't listen to investment press. I don't look at financials. I don't look at charts. I don't even work on a laptop. I do everything on my iPhone. I'm just really, really unconventional.
Avery, Gen C, excitement coming. We have a banger of an episode. This is a long one, so we're going to jump into it pretty quickly. The only thing I wanted to ask you before we jump into our episode is, I don't know if you saw this news. I was pretty jazzed by it. Lionsgate, the studio that produces things like John Wick, just made a deal with Runway ML, where they're basically giving them their whole library to train on in exchange for Runway helping them make movies in the future utilizing AI video. Crazy, but I wanted to get your first reactions to this news.
Not surprised, because we've been talking about Runway for well over a year now on this podcast. I think that Runway is potentially the future of filmmaking. It also is going to enable people who have not been able to do this to do it in a much more economical and potentially creative way. I think it is going to be a big, big thing. It's not, something that's here today at filmmaking scale, but I'm excited. I love the Runway guys.
Yeah, it's pretty well. It's also weird to think you could train these 4 John Wick movies and suddenly now, you bring down your cost of production. You don't need Keanu anymore. We might have John Wick for the rest of our lives. It's going to be very exciting.
Love that.
Avery, all right. We're going to jump straight in because we completed an episode.
We've got a hot guest today.
Yes, Chris Camillo. If you don't watch Dumb Money TV, he is one of the sort of larger financial creators out there. Also, one of the most successful equities investors who really just listens at social signals to build his portfolio strategy and honestly just crushes it. So I don't know. I was very inspired watching this. I think I'm doing all of my investments wrong. And I think for our audience, it's not only is it good to think about it for how you look at markets, but also good, I think, because there's so much in the manner in which he does it that brands can take away from and individuals can take away from that can make their jobs better. So after the break, we're going to come back with Chris Camillo, Dumb Money, author, investor, entrepreneur, big brain, who's going to tell us everything he knows about social arbitration.
This is going to be a good one. Buckle up, Gen C.
All right, we're here with Chris Camillo. Chris Camillo is the host and creator of Dumb Money TV, also an author, investor, and entrepreneur. Chris has an amazing history of this story. Chris, you can tell us where you took $20,000 and turned it into $30 million in the equities market. You're one of the best equities investors out there. I just love how much you are contributing your thoughts into bringing up other people and how to think about the way trends, the way you think. I know we're going to talk about social arbitration. We're going to talk about Pokemon. It's going to be a wild conversation. Chris and I have been in a chat group for probably 2 years. We met in person at a dinner about a month ago, and I was mind blown. So I was really excited to get Chris on. So Chris, that was the very brief, but give us the 90 seconds. Who is Chris Camillo? How did you get here?
Yeah, well, I'm an investor. That's pretty much who I am. That's how I see myself. I think some people would say I'm probably the world's most unconventional investor. Others might say I'm the world's weirdest investor. Whatever you think an investor is, that's not how I operate. I invest in both private and public markets, but I don't really read the Wall Street Journal. I don't listen to investment press. I don't look at financials. I don't look at charts. I don't even work on a laptop. I do everything on my iPhone. I'm just really, really unconventional. I started exploring this methodology I call social arb investing, which is kind of just being an observational investor back in 2007 with $20,000. I'm just a regular guy with a regular job. And 3 years later, it was millions. And now it's continued to grow at a clip of about 70 some odd percent a year over the past 17 years. So it's been a wild journey, and I kind of can't believe it. But I'm just a regular guy who does things differently. I kind of think about investing differently, and we could talk about that, I guess. But I'm an investor at the end of the day. That's what I am.
So what I'm hearing is I should throw away my laptop, should go on my phone, just observe social trends, and I can be up 76% per year if I have the smarts and the insights of Chris Camillo. Chris, that's incredible and so impressive. So we need to hear a little bit more of how this all got started and how you spot these social trends. What does social arb investing really mean?
Yeah, it's just basically being an observational investor. And like when you said if you're as smart as I'm kind of just a big idiot, honestly. If you were in my friend group, you would just think I'm just like another big idiot. Like I'm not like this super
Am I
smart guy.
not in your friend group? That's hurtful.
Now you are now.
Okay,
We
good.
will add you
We're
to the chat, Avery.
Yeah, well, I did to the chat. I always say it's not about being smarter than other people. It's about being smart in a different way than other people if you want to get ahead as an investor. So you really have to, Steve Jobs said, you kind of have to think differently. So social arb is not necessarily about social trends. It's about identifying change in the world, any type of change. So if you think about change, with change comes opportunity, and that's exactly what I do. It could be a change in consumer behavior. It could be a change in culture, a shift in culture. It could be a radical change in technology, a change in government, anything, a change in weather patterns, right? Like anything that's happening in the world that is meaningfully different than it was before creates an opportunity to connect dots to either companies or sectors of the economy that would either benefit or be harmed by that change. And it's all about surfacing the change quickly and then connecting the dots quicker than other people can connect the dots. It's not about financials, it's not about technicals. So, this whole methodology is something that anyone can do. You don't have to have like a financial pedigree from Wharton to do what I do. In fact, if you are a mathematician or if you are like a finance head, that's kind of a disadvantage because you end up getting consumed by the wrong things. I would say the best person to do what I do would be like a private investigator, right? Because it's all about just observing your world organically. You already see these things, but you kind of see them and then you forget about them. Where I see them and I immediately start going into research mode. Like, wait, that's kind of a big deal that people are buying that product now where they weren't a month ago.
Chris, if I could stop you though, I would love to get a little practical, right?
Yeah.
Maybe you can give us an example of from 2006 to now, what you saw before someone else saw it and how like that worked that you then took advantage of.
Like a story I tell all the time is because I think so many people saw this, especially if you have kids. I don't know whether it was like 8 or 9 years ago, 10 years ago, when all the kids started doing that DIY slime thing where they were making slime in their house. Remember all that was going down?
Yeah.
So, how many of us saw that? I don't know, 80 million of us were part of that through our kids or kids that are in our family, or we saw it on the news. So, a social arb investor would see something like that and go, like, what is slime? Where do you buy it? Who makes it? Oh, so nobody sells it because you make it yourself. Okay, well, how do you make it? The primary ingredient in DIY slime is white glue. Okay, well, who makes white glue? Elmer's Glue. Okay, who owns Elmer's Glue? A company called Newell Brands. All right, well, if they start selling twice as much Elmer's Glue than they've ever sold in the last 80 years, which is about exactly what happened over a very short period of time, what kind of impact would that have on this company, Newell Brands? Would it actually move the needle for that company? Well, Newell Brands is only growing at like 2.5% a year, and Elmer's Glue is roughly 2.5% of their revenue as a company. So if they double the Elmer's Glue sales, then their growth rate is going to double for the first time in a very long time under a very short time period. And that's probably really good for the stock. So then the next question you have to ask yourself is, what does everybody already know about that? Have people already connected the dots? So there's some work that you can go through to try to assess the degree to which the rest of the world, at at least the investing world, has already identified that thing that you just identified. And if you have figured out that one, it will move the needle of a company, and two, no one else has connected the dots yet, or very few people have connected the dots yet, And 3, there's nothing else happening at that moment in time to that company or that sector that is more impactful than the thing that you discovered. If you could put all those things together, then that's what makes an amazing high conviction social arb trade. So I've been basically doing that exact thing for the last 17 years. I would say 4 to 5 times a year, I'll see something like that. Or I see hundreds of things. So the top of the funnel is hundreds of daily observations. And at the bottom of the funnel are 4 or 5 where it all aligns. And doing that 4 or 5 times a year is all that it took to kind of be this, from a statistical standpoint, maybe the best performing retail investor, at least over like a multi-decade period. But it's crazy because I did it doing just that and only that, right? Like literally only that. So the social part is interesting because how do you see the most amount of things, right? So that you're not restricted to just what you see over your daily life walking around at the mall and the restaurants you go to and whatever else you do every day. Well, it's by getting on the social web because the world is digital now, right? So everybody speaks to each other over the social networks, and you could actually observe the world unfolding second by second from your bedroom on your iPhone by just knowing where to look and knowing how to read what I call conversational text. So basically, most of what I do is I analyze conversational data, people speaking to each other, mostly in comments of videos, because that's where the gold is in this. So it's not about a video where a woman says this new dress is going to be the hit dress of the summer. It's the comments where 10,000 other women are saying, "We totally agree. It's already sold out. We're on a wait list." And they're like, "Yes, yes, 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 yes." That's where the gold is. So I spend a few hours a night basically sifting through tens of thousands of comments, primarily on TikTok videos. And that's where the brunt of my research takes place as a social arb investor.
Wow. So TikTok comment section is your current, that is like where you go to do your investment research. That is how you sort of form your theses, is by understanding viral videos and the comments in those videos that are ultimately driving that consumer behavior.
Yes. If you were to ask me that question 10 years ago, it was mostly Twitter.
Okay.
And there was a time when Twitter was a place where people shared and expressed their interest in what they were doing on a day-to-day basis. Over the past decade, people stopped doing that on Twitter, and Twitter's become a bit more of like a news and political talk, maybe some financial speak. But people are not talking about, the shoes that they just found that they fell in love with or the movie that they're seeing that night on Twitter. That's not the place for it anymore. I actually started a company called Ticker Tags back in the mid 2000 teens. That was the first social data intelligence company to enable hedge funds and sell side investment banks to properly analyze what people were saying on Twitter and to measure the volume of conversation around very granular topics on Twitter and that were connected back to the products made by publicly traded companies. So we built the first ontology to analyze conversational data on Twitter, and we had some of the world's largest hedge funds using that. I eventually sold it to Jefferies Bank, a company called M Science, which is their alternative data division at Jefferies Bank. But today, if I were to build that company is called Ticker Tags. I would have built it on the TikTok data stream, which wouldn't be possible because you can't license TikTok comment data. I actually had a licensing deal with Twitter back then that gave me what's called the Deca hose, which is 10% of the fire hose in real time.
Wow. Okay. So it was Twitter. It's now TikTok. What's happened? What platforms have you gone to in between? Has YouTube ever been one of those? Are you on Reddit? Like any other platforms that have really stood out to you as being like the consumer water cooler?
Yes, all the platforms, but there was a day when Facebook was a big one, obviously. And I love Reddit and I still use Reddit as a platform because there are some topics where people don't discuss those topics on TikTok or on Facebook, but they discuss them in Reddit forums. So, one example that was a huge trade for me was in the early days of cloud computing. I was analyzing the conversational volume on technology channels of Reddit where devs were discussing cloud computing and the degree to which they were planning and changing over to AWS. So we were literally measuring the volume of conversation around groupings of keywords on technology channels of Reddit. And we were seeing an exponential growth of these technologists just talking to each other about moving their company's infrastructure to the cloud on
Wow.
AWS. And that was a really good indicator of traction for AWS well before they were actually booking those sales, well before they actually showed up in their earnings reports. And so something that's really important to note is that as a retail investor, your competition isn't just other retail investors, but it's institutional Wall Street, right? And so the primary data set that Wall Street uses to get an edge on each other and on retail investors is transactional data. So they have all kinds of transactional data. Some hedge funds spend millions of dollars a year on credit card data and supply chain data, and just like every piece of data that they can buy, they will buy. So, how do we as retail investors get an edge on institutional Wall Street? Well, there's really one data source that institutional Wall Street is afraid of because it's highly interpretable and it just doesn't really fit in their wheelhouse. And that's conversational data. And what's fascinating about conversational data is while it is interpretable and it's like harder to build a historical correlation between if someone says this, it's going to do this to sales. Conversational data happens earlier than transactional data. So people speak about something before they actually do that thing. So you can actually see what people are going to buy today, tomorrow, or what they bought today before it shows up, right, in the data that Wall Street is using. So it actually is like the ultimate data to analyze, but you can't be afraid of it. And Wall Street is and I can say without a doubt that Wall Street's afraid of it because I spent years working with the largest funds on Wall Street trying to educate them, and they would just gloss over, and they're like, "We don't think we can do this properly because there's not we want 4 years of historical correlation data before we can build a model." I'm like, "Build a model? Like, what? This is real time. Like, this is the world is
Right.
unfolding
Look at the
in real
comments.
time."
Chris, so after you and I had dinner together, I was like, oh, this feels like something I should just quit my job and do. Clearly, it's not that easy. I also imagine whether it's companies, other investors, that once they hear your results, they're like, why would I not do this? Right? You're beating the market by an exponential amount. And you have created Dumb Money, which is a YouTube channel, which is quite popular, where you and some of your friends really talk about this. So you're kind of giving away your thought process for free there. I guess I'm wondering, one, like, has all the predictive nature of everyone jumping in and out to all these different things, everyone talking on YouTube and TikTok about investment strategies. There's so much that feels like, half of it are people just like pumping their own bags and trying to get paid on those things. And then there are people like yourself who I think are trying to teach a methodology of thinking. But clearly, you and your folks spent, a long time talking about Palantir the other day. I'm assuming some of the people listening went out and bought Palantir based on that conversation. I assume you had already bought Palantir. So, like, I guess how do you look at today's state? Because I think in 2006 through 2020, it was a different world. Now there's so many people who are looking for signals everywhere, and I think are probably have gotten the lesson you've taught, even if they're not as good. So is it still as ripe to be able to do this process now? And then because we have a lot of folks who are also on the corporate side who listen to this show, what could a company glean out of this process where they're not trying to make money, but maybe they are trying to be ahead of a trend?
Yeah, so there's never been a better time than now because the world is more digitally connected every day and people are sharing their thoughts digitally more now than they ever have before. So the type of conversational data that I need access to is more readily available and the quantity is bigger than it's ever been. So yes, this is the best time. And also the world is more socially connected now than it ever has been. So regular people have the ability to either propel or destroy a brand within days to weeks, just based on a story going viral, right? So like it starts with one woman saying that this is a super cool pair of pants, and 5 days later there are 20 million women that are both discussing and watching and reading other women talking about how cool that pair of pants is. And that one instance can meaningfully move the needle for a company as large as Lululemon. And the analysts don't even have a clue what the hell is going on for another 3 or 4 or 5 weeks, right? So, one, there's never been a better time than now. Two, you don't need to quit your job because you can do this just by living your life and retraining your brain to pay attention to the things that you're seeing online and offline, and you just slowly learn how to connect the dots, and you just have a lot of fun with it. You don't need to do it 5 times a year. If you even find one thing once every 2 to 3 years, that's enough to put you in the top 1% of all investors in terms of your returns, right? So that's actually all you need to do. And in terms of like me being a content creator, a financial content creator, first of all, let me just say that I'm friends with a lot of the other large financial content creators, and I kind of love every one of them. Like, these are really good people, and they all bring something really special to the table. That said, they all kind of do it kind of as their career, so they have to do all the stuff. They have to do sponsorships. They have to do the courses, and I think they all come from a really good place. I want to say that me and my two partners, Jordan and Dave, we might be the only finance creators in the world that have never made like a dollar off of our community. Like, we don't do sponsorships. We have a Discord. It's like just open and free. We discuss everything there. We don't have courses. Like, we sell some merch, but we do it. I think we lose money every time someone buys a hoodie, one of our hoodies. So it's like we do this because we have the like at least I have this lifelong mission to bring every human on earth into the investor class as a way to solve the wealth gap. I think the only way we'll ever solve the wealth gap, I don't think the income gap is ever solvable, really, but the only way we'll ever solve the wealth gap is by bringing people into the investor class. I mean, this is the only way I have to do it. So this is like my way that I think I can give back to the world, is to inspire other normal people like me to start doing this, even if it's just on the side. So I know you asked a bunch of
Well,
questions. I don't know if I've answered all of them.
I want to address one thing, and I actually want to address this comment to Avery, because Avery, I think you and I have spoken over the years we've been doing the show about folks like Elf Cosmetics, American Eagle, Lululemon, all the folks who use these TikTok trends and have done so well with them. What I really kind of love, and I want to get your opinion, Avery, on a brand side, is a lot of us look to say, "Oh, am I just going to buy the hot new product?"
Yep.
Whereas Chris, I think, is there like, "Oh, am I going to buy the hot new company?" Which is a real
Yeah.
shift in mindset of like playing trend instead of being repping the trend, but actually owning the trend is, I think, a really fascinating concept. Do you think brands, Avery, like understand that also for their bottom line?
I do think that they understand like riding trends. That's like the, normal thing to do. The thing, Chris, that stood out to me and what you shared and what I think really smart brands do is create those moments. And it's very hard to do, right? Like making slime be a thing. Like, and actually a friend of mine, Karen, has a company called Slumu. And like basically when you said that, it came to my mind because she was like, yeah, it was COVID. I was feeling really stressed. I got into like making my own slime. And like now they have these locations all across the US, which are amazing. And this really cool experiential thing. So she saw the trend, did something with it. Chris, you saw the trend. You thought, okay, amazing. What is the ingredient to this? How is that going to impact the market? And like you go sort of 2 levels deeper. The normal thing any brand would do is be like, cool, let's have Swedish fish slime or something like that. And how do I participate in the trend? But the layer deeper, which stood out to me, is brands who can create those trends themselves, or investors who can like really understand the underlying why. That's sort of how I think about it.
Yeah. So first of all, yeah, people, consumers, regular people already see this stuff. Like, they are actually on the front lines of seeing it first because they're knee deep in the real world and not distracted by the noise of finance, which is really nothing more than a distraction. So people see it first. Speaking of like cosmetics, like one of my biggest and favorite trades was when Jeffree Star did a video for the Elf primer putty, 7, 8 years ago. I don't know how many years ago, a long time ago. and saying that this $7 drugstore primer putty made by Elf Cosmetics was as good as the $60 one that he loved. And I went down to my local Walgreens and just stood there all day and watched dozens and dozens of teen kids coming in with their moms and buying every single Elf product, not just the primer putty. I was like, wow,
Hmm.
this is insane. Elf was at $7 a share. I think it's probably at like 170 now. You know, like
Wow.
I bought Elf, and like sure enough, that video got 10 or 12 million views. So there's 10 or 12 million people that saw exactly what I saw, and I'm probably maybe the only one of the 10 or 12 million that immediately went out and bought Elf stock. I actually called one of the big cosmetic analysts on Wall Street. This is part of my process to understand, does Wall Street, have they already seen what I saw? And sure enough, that analyst didn't even know who Jeffree Star was. So they hadn't seen the video. If you're a cosmetics analyst, why are you not like literally paying attention to every major content creator waiting for something like that to happen? That's what's mind blowing to me. These people are in so many ways disincentivized, kind of lazy, and they just don't think. Anyway, that stock almost doubled in like 60 days. But these are things that certainly people see, certainly brands create. Now, Elf is a brand that has since learned, and now they try to create those moments. They're actually one of the most cutting edge brands when it comes to proactively trying to create viral moments. It's really hard to do, but it can be done. And there are some brands that are better than others at, like Crocs, right? And Stanley was same executive at both companies, right? So obviously, if you have one executive who can go from Crocs to Stanley and do it at both places, then it's something that can be engineered and should be engineered, because even if you fail 9 out of 10 times, the benefit you get as a company of the success when it happens is enormous. It could be game changing for a company. But I think every company should have a social analyst whose job is nothing but being on one of these social intelligence platforms, which they have many for marketing, and just analyzing the world as it unfolds, and seeing where the intersections are with that company's product and sector and how that company should be. And that person should be in every meeting with all of the executives who are consumed by noise. And that person should literally be saying, hey, here's what's happening in the world. This music video went viral on TikTok today. And interestingly enough, the video, it talks about Diet Pepsi. All right. So, like, maybe we should think about stocking more Diet Pepsi in the front of our store, because a lot of people are going to come in and want Diet Pepsi. And that's actually a real example, by the way. But like, no executive is going to know that a song went viral from the 80s on TikTok that week, and it has a random brand in it that is likely to go viral, and let's get in front of this and do it. Or, maybe we should, leverage this other viral song in our marketing this week and put out our own TikTok. Like, there should be someone who's just listening, like a social listener, and connecting dots for the company, I think.
Sam, I have a question because we've talked a lot about sort of, more traditional public companies, but you've also invested in a ton of companies that are sort of outside of this market, especially the trading card universe. I think there's Collecticon and a few things like that. Chris, how do you get into investing in those types of spaces as part of your mission to democratize this information for the layperson?
So, if you think about the methodology being a social arb investor or an observational investor, it works best when you could be totally open minded and opportunistic, meaning you let the data and you let the change in the world direct where you invest entirely. So you let it take you wherever it's going to take you. And the pandemic was a really weird time, obviously. And a lot of us got exposed to things that we normally would never be exposed to, including myself. And one of those things for me was I was watching a Logan Paul video that went viral, where he bought the world's most expensive Pokemon box. And I said, well, that's interesting. This is blowing up because people are bored and they're collecting Pokemon cards. And there's now $1 million Pokemon cards. And people are kind of losing their minds. But a big part of what I do is philanthropy. And I have a foundation. And I said, why don't I buy the world's most expensive Pokemon box and I'll auction it off, and we'll have a lot of fun with it, and we'll give all the proceeds to kids charities and animal welfare charities. So it was like a 2-month experiment. I got involved in the Pokemon community, met all these big people. I ended up throwing the world's largest Pokemon party in Las Vegas. We auctioned it off. Steve Aoki was there on stage with me, and Gary King Pokemon, who's the world's largest Pokemon collector, has $10 million of Pokemon cards. And we had a lot of fun with it and did something great for charity. But after it was all over, I got a phone call from Gary King Pokemon. He said, "Hey, you might want to meet this friend of mine who's starting this trade show called Collecticon. And it's the first ever trade show for TCG, table card games, which are blowing up right now." That's okay. I took a meeting with him. And this is a really smart guy. His name was Matthew. And he was about to put on his first show. I went to it. He did a really good job with it. And I was like, there is a whole community of millions of people who are collecting these Pokemon cards, and they don't really have a physical place to celebrate that. And this Collecticon, I could see this really having legs. So I became Matthew's business partner, and I invested a good chunk of money to help him expand the show. And we're now doing 12 shows this year. We'll do 15 or 16 next year. It's grown into this massive traveling world's largest collectibles TCG Pokemon trade show. We're in 150,000 square foot convention centers. And that's how it happened, because I was out there just listening and paying attention to what the world was interested in. And if it not for the pandemic, I'm not a big collector myself. I don't collect Pokemon cards, but I found out about it
You
because I
collect
was listening.
companies that collect Pokemon cards.
Yeah, exactly. So, yeah, I mean, that's how I got. Listen, I have a really big top of funnel. My top of funnel is actually everything. Every voice in the world is my top of funnel, and you never know what's going to fall out of the bottom. But sometimes the things that fall out of the bottom are a publicly traded company that I can invest in easily in the stock market. Sometimes it's an idea that doesn't even exist yet that has to be created as a startup. And that was Collecticon, right? A lot of times it's a private company because there are no public companies. And so I now have to go track down this private company and look up who's invested in it and start calling people that own that company's shares to see if they would sell them to me on the private market. I don't care if it's an idea, a private company or a public company. I'm going to figure out how to get my hands in it and invest in it. And by the way, just so you guys know, the life cycle of a social arb investor is you invest in something at the point of an information imbalance, meaning when there's an imbalance between the information you can identify and the rest of the world can identify. At the point of information parity, when the rest of the world has come to learn that thing that you found weeks or months earlier, that's when you exit. So I might be the only investor in the world that doesn't look at stock price. So people are like, at what price do you sell? I'm like, I have no idea. Like, I don't look at stock price. I don't even care what the company's trading at when I buy it. All I care about is this one piece of information. As soon as the rest of the world starts to realize that that information is true and factual, I'm going to make the assumption that that information is now factored into the price of the stock, and I'm going to sell my shares. Whether it's up or down doesn't really matter. I'm trading information. I'm not trading
Right.
anything else. So I'm blind to price, if that makes sense. And by the way, that is
Yeah.
relatable to every market. So crypto, for example, like if I was doing that in crypto, I would not look at the price of the crypto I'm trading. I would only look at, is the information now fully disseminated? Then now I've lost my alpha and I need to exit. Whether the crypto went up or down as I anticipated or hoped it would is irrelevant at that point. I need to exit because my alpha is gone.
Okay, so Chris, the final topic I want to talk, and Avery and I have talked about this a lot, is I know all three of us are very bullish on AI and how it's going to change the future. I've heard you now talk for probably a year or two, specifically on your deep interest in the humanoid robotic side, also, or the humanoid robotics. I'm just wondering, like, your thoughts on why one humanoid robotics are so interesting to you, two, how that overlays with AI in the future, because you were kind of very bullish last week or 2 weeks ago on your video about these AI companies are going to be the first $10 trillion companies. So how do those things match in terms of humanoid robotics, AI, where all of this is going as a category, and why you're so interested in it?
Yeah, this is it. This is like everything I've ever worked towards has come to this moment. This is I really do believe that. So if you think about change bringing opportunity, the bigger the change, the bigger opportunity. Likewise, the faster the rate of change, the bigger opportunity. I have never witnessed a change anywhere near as large as what I'm seeing with AI in my lifetime. And I've never witnessed a change that is approaching as quickly as AI, meaning so the speed is so fast of this change, and the size of it is just monstrously huge. So, as investors, this is the ultimate opportunity to capitalize on rapid change that's happening in the world. And a lot of us feel that we missed out on the first part of AI. I actually don't believe that's true. I think there's numerous opportunities just in pure AI. I talked about Palantir on my show this week on Dumb Money Live as being a company I think has massive potential going forward, even though it's trading at a high PE today. But the big one, the really big one, is what we call embodied AI. Embodied AI are basically robots. And specifically in the near term future, I believe humanoid robots. And the reason for that is that roughly, I think, a third of the world's GDP is physical labor, is associated with physical labor. For a very long time, we didn't quite have the right mechanics on the engineering side to build a proper humanoid robot. About 2 years ago, actuator technology started to really hockey stick accelerate in terms of how good it was getting. Actuators are the muscles of the robots. So I have been following a humanoid company for about 7 years. Befriended the CEO. They're one of the top three in the world. They're called Aptronic out of Austin. And the CEO, Jeff, told me a few years ago, he's like, Chris, we've accelerated our technology and we will have humanoids in the next few years and it's going to blow your mind. And I started paying closer attention. This is pre-AI, okay? So we're talking about hard-coded humanoids. And then you had the AI revolution happen. Well, the AI is the brain now of the robot. And the AI essentially is accelerating at the same time as the hardware tech is accelerating. And that is just wild because we now have robots with advanced articulation. And you've heard Elon Musk talk about this. I've actually seen a little bit of this behind the scenes. You're going to be able to thread needles with humanoid robots very soon. So we have all the articulation and the what we call full body control, where the robots are able to fluidly walk, run, do things, balance as well as a human at the same time as we are getting these massive breakthroughs just in the last like 60 days, okay, with robotic autonomy. And part of that is some of the work that Nvidia has been doing, but we have these autonomous AI brains that we're putting in these advanced humanoids, and I'm telling you, we are single digit years away from having humanoids basically repurpose the entire earth and how we think about physical labor. I'm really excited about it. I think there's a lot more good than bad, but there's a decent amount of bad that can come out of this too that I'm not going to obsess over because it's out of my control. I'm going to focus on the good. But I will say this, it's not about displacing humans. It's about allowing us to do things that we just can't do with the humans we have on Earth today. And yes, for every one human will be able to do the work of 20 soon, but all that means is that we'll be able to have 20 times the amount of ideas be developed into companies and actual actionable products and services because humans will be able to do things 20 times more efficiently and productively because we'll have an infinite amount of physical workforce to do all the stuff that we should not be doing as humans, right? No human should have to live half their life on a manufacturing line doing backbreaking work that's going to enable them to not be able to walk by age 65, right? That's not a life we want for humans. As an investor, this is unbelievably interesting because you just can't wrap your head around how this is going to change. So the number of investment opportunities that are going to surface as a result of this shift, I still can't wrap my head around it. I could spend the next year just thinking about it. It's an interesting thing to think about. That's all I'm saying. Like, it's just really interesting. But there's never been a better time to be a just a regular Joe investor that has no financial acumen, that has no interest in mathematics or technicals, that thinks investing is super boring. If you're one of those people, that's me. Okay. I think investing the old way has got to be the most boring thing in the world. And what I think people don't realize is every woman should be an active investor because women just don't like investing. Like, I've been trying for 20 years to get women to invest, and it still kills me. I think like 1% of my audience is probably female because women just don't like investing. I'm like, no, you are at the perfect intersection to be amazing investors because women are more in tune with a good 70 to 80% of these changes I keep talking about than any man is, right? People that are living their life, that are going out and meeting people and on social media and just having touch points with a diversity of culture and stuff around the world. Those people are set up to be the best investors because they will see things before other people see things. So all you have to teach yourself is to start connecting dots. That's really what the game is. It's connecting dots.
I love that. Okay, I'm gonna have to, listen to your show more often, share it to my girlfriends. I'm on it, Chris. And it's really interesting to hear your perspective on humanoids and also your journey to realizing that, and obviously what's happened over the past 24 months in this space. It's a nice validation of your thesis. But of course, I've got to ask, what's that next thing that you're sort of seeing bubble up, trend that people don't yet see? What's that next putty at Walgreens that you're seeing little girls line around the block for?
It's a great question. I'm always on the lookout for it. It could pop up tonight in my research. I don't think I have like anything right in front of me this second that I'm trading based on an observation. So it could be a few hours from now until I find it, or it could be a few months until I find the next thing. But I will say that AI, robotics, humanoids, it's such a big thing
Mm-hmm.
that it's something that people should really be focused on. And by the way, I'm obviously not a financial advisor, and everyone has their own risk
Absolutely. This
tolerance.
is not financial advice.
Yeah,
We
I
always
well,
say
I
that.
tell everyone, like,
Exposure.
your risk tolerance is very different than mine, so don't do anything that I do. I'm all about just like, my community actually surfaces more ideas for me than I surface for them. So dumbmoney.tv is where I have all the socials, but we do our show Dumb Money live on YouTube every week, and we have a Discord where we just talk about this stuff every day. I don't know where the next thing is, but man, I would start reading about humanoids and robots right now to get yourself comfortable with it so that you can like just start following all the robot and the humanoid people right on Twitter because you want to be aware of how these things are evolving and changing. And I call it having a prepared mind. So if you prepare your mind to be looking for this stuff every day, then when it happens, you're not having to connect dots because you kind of already connected the dots and you already kind of know who the winners and losers are going to be. And you're just waiting for the thing to hit the level of traction that you think it's going to hit. And then you just go and you really lay into those investments that you've been wanting to make. So just be aware, prepare your mind.
All right, Chris, this has been a wild-ranging interview. Thank you so much for sharing so much with us. Tons to think about. I mean, I think Avery and I are just gonna quit our jobs, start
Research
doing some social
humanoids.
arb. Yeah, we're making it all happen. Everyone watch Dumb Money. It's a very entertaining and fun watch. Follow Chris on all the channels. Chris, thank you for spending so much time with us, and we'll see you soon.
Thank you
Thanks,
so
guys.
much, Chris. Wow, wow, wow. Chris says he's dumb, but I don't think so.
Yeah, I think it's a front. Avery, 60 to 70% returns every single year now for 17 years.
A lot better than
Like,
my
it's
portfolio.
wild.
Let's put it that
Yes, he's been quoted in a lot of books about his style. He's really like one of those guys who sees things before others do. It's a fascinating world. Gen C, thank you so much for listening. We're gonna head off. I don't even think there's any more words to say,
way. Catch y'all
but
next week.
we'll see you next week.
Easy.